Hello, everyone, and welcome to the first episode of the WorldCurrents Podcast. I have been planning to make this show for a while now, and recent unfortunate events have inspired me to make now the time to do it. Most people know about what's been going on with GameStop recently, but I'll do a quick recap for anybody who doesn't. Basically, some users on the popular Wall Street Bets subreddit found that GameStop stock was being shorted at some very extreme levels by large hedge funds. Shorting means that these hedge funds were selling stocks that they didn't even own for a higher price, borrowing them at that moment, expecting the stock's price to fall later on so that they could purchase shares at a lower price to use to cover the stocks that they have already sold at a higher price, basically betting on the company to fail. It is a somewhat confusing concept to explain, and I can get more in depth with that on the Matador Investments YouTube channel in the future, which I will post a link to on our website at worldcurrents.co. But anyways, these Reddit users discovered these shorts and decided to bet against it by buying shares of GameStop themselves in an attempt to bring the stock price higher. To the world's surprise, around January 22nd, this actually took off, and millions of people have now bought shares of GameStop, causing the share price to skyrocket. Now, these short sellers at the hedge funds have been having to buy their borrowed shares back at much higher prices than what they short sold them for, causing them to lose billions of dollars. These Wall Street Bets users then proceeded to do the same with some other uncommonly bought stocks, such as AMC Entertainment, Bed Bath & Beyond, BlackBerry, Nokia, and some others, and things were going pretty well for them as all of these stocks began to rise sharply as well. But here is where the story gets pretty messed up. When the markets opened Thursday morning, Robinhood and many other brokerages restricted trading on all of these stocks. Users could only sell their shares of these companies, but not buy any more. As we know, large sell-offs crash the stock's prices, and buying shares raises them. With users unable to buy shares, though, and only sell, the prices crashed. Many people got scared and sold their shares as well, crashing the prices even further. Restricting the trading of these stocks was bad enough and has drawn the attention of our government and many celebrities. Representative AOC, Senator Ted Cruz, and several other members of Congress have called for hearings to make judgments on what Robinhood did on Thursday. Robinhood's clearinghouse, Apex, seems to be behind a lot of it. They are also used by other brokerage websites like Webull, Ally Invest, Public, and others. The CEO of Public actually spoke out on Thursday, angry at Apex Clearing for forcing these restrictions on their app. He disagreed with that. All of these brokerages that I listed lifted the restrictions on Thursday evening a bit before the market closed, except for Robinhood. Robinhood kept the restrictions throughout Thursday, and then they only eased up a little bit on Friday. They allowed limited amounts of stock to be purchased. Users could buy 5 shares of GameStop, 115 shares of AMC, and limited amounts of the other 11 restricted stocks. Later in the day, though, they reduced those purchases of all the restricted stocks to just 1 at a time, and they increased the list of restricted stocks from 13 to 50. Robinhood claims that these restrictions were to protect their customers and to protect themselves. Robinhood has also been selling user stocks without their consent. There were several posts on Wall Street Bets of users posting screenshots of Robinhood's message to them as they automatically sold the users' shares of GameStop, claiming that it was protect the users. They must think that their customers are too stupid to make these decisions for themselves. If we want to take these risks, then so be it. Restricting us is just insane. Raising margin limits is completely fine and reasonable, as Robinhood does stand to lose money if the users are gambling with margin. However, there is absolutely no reason to restrict users from buying shares with their own money other than for blatant market manipulation. Before I go on to talk about market manipulation, however, I want to talk about another illegal act that Robinhood committed on Thursday. Thursday morning, they sold all of my shares of AMC for $13.55 per share when the stock was around $16. They placed the order automatically on my behalf, and I tried to cancel it and kept getting error messages. They quite literally stole my money. I was using a little bit of margin, but was nowhere near a margin call. And if you are in a margin call, they give you until the end of that day to resolve the call. So that was definitely not the case. I lost thousands of dollars, and I would like to add my case here as evidence to somebody's lawsuit against Robinhood, or possibly file my own lawsuit against them for, automatically selling my stocks at a loss for no reason. There are some lawsuits out there that I have seen, but they only mention the fact that Robinhood halted trading on GameStop during an unprecedented meteoric rise in the stock. I fear that those of us who invested in AMC, Nokia, and the other affected stocks may be left out of the lawsuit. I am personally raising money for this cause and would appreciate any donations from anybody listening to this podcast. I don't know if a lawsuit will necessarily resolve all of our issues or not, but I pray that it will help us out in some way. I do expect that the congressional hearings and SEC investigations will lead to the creation of new laws and restrictions on Wall Street, but I'm not sure that any lawsuits filed against Robinhood will actually lead to any of us that got screwed over on Thursday getting any of our money back. With any donations left over after legal expenses, I plan to do something to return the money that everybody has lost in situations like mine. I'll possibly sell some merch, get these podcasts and the YouTube channels up and running at better production quality, and earn some, ad revenue that I can try to distribute out to everybody, as long as they, provide some sort of evidence that the same thing happened to them as what happened to me. But I don't know. I will let anybody who donates money decide what the best move would be with that money, and we'll go with, we'll kind of vote on it, what the best move would be. But my number one priority is definitely filing lawsuits against Robinhood over everything that has happened. And now for a quick sponsored break, and then I will get back to the news. Alright, so we left off at market manipulation. Why would Robinhood want to manipulate the market? There are several theories that are all pretty plausible, and, it could be very likely a mix of all of those theories. One, Robinhood offers commission-free trading, meaning that it does not make money from its users, regular people like, me, probably most of the people listening to this, a lot of the people that bought those GameStop stocks, they're not making money from us. So how do they make their money? They sell our transaction data to what we call market makers. One of these market makers is Citadel, which is under a lot of fire right now during all of this. Here is an excerpt from a Washington Post article posted on Friday. Robinhood and other brokerages cannot execute trades directly, so they usually work with a market maker firm. Robinhood is required by law to work with these market makers that can give their users the best market prices for a given trade. When Robinhood directs a transaction to one of these third parties, the market maker learns which security is being bought or sold before the trade happens. Citadel and other market makers pay Robinhood a small fee for this privilege, which gives the market making firms information about retail trading patterns. Citadel said that it uses this information to improve its trading algorithms. Market makers also take a small profit on the spread, the difference in price between what a Robinhood user pays and the price at which the security is being sold on the market. So in some cases, Robinhood could charge us, say, $5 for a stock, and we actually buy it for about, let's say, $4.90. Those extra 10 cents end up going to the market makers. But that's beside the point. I believe they actually got sued for that in the past. I'm not completely sure. But that's unrelated to this issue. It's just a little, not a good thing to think about, that we could be getting better deals on the stocks we're buying, but that extra money is going to these large companies. But anyways, that's besides the point. The Washington Post article was talking about Citadel Securities, founded by billionaire Ken Griffin. Ken Griffin also founded Citadel LLC, a separate hedge fund. One of the large hedge funds that the Wall Street Bets group on Reddit was betting against was Melvin Capital, which shrunk 30% due to their GameStop shorts. Citadel LLC recently had a very large part in bailing Melvin Capital out during all of this. One theory is that Citadel LLC was losing so much money on their investments in Melvin Capital that Ken Griffin used Citadel Securities to demand Robinhood to restrict the GameStop trades. He denies that this happened, of course, but it is very possible. It's also possible that Robinhood did this on their own, knowing that their hedge fund clientele was losing billions of dollars. If the hedge funds went bankrupt, then Robinhood would have no customers to sell our market data to. Another interesting turn in this story is that one of the people that we would expect to speak on the investigations in the coming weeks and laws regarding all of this would be President Joe Biden's new Treasury Secretary, Janet Yellen. According to a Politico article from January 1st, however, Yellen had received over $7.2 million from Wall Street and large corporations like Citi, Goldman Sachs, Google, and none other than Citadel LLC. Now, this creates a massive conflict of interest. Surely these companies did not pay Yellen just to hear her speak. She has spoken plenty of other times and has given interviews for free. It's much more likely that these companies wanted to be on Yellen's mind in a positive light, even subconsciously, in case a time like this ever came to be, as she would possibly be a crucial decision maker of their fates in the future. If they were to be investigated like they are about to be. Whatever the case is, what went on this week was very wrong, and somebody needs to pay for what happened. Who knows how many Robinhood users suffered the same outcome of their restricted stock holdings that I did and lost thousands of dollars. Now, I don't know about you, but thousands of dollars takes me months to earn from my regular job and is no small sum of cash by any means. Robinhood absolutely screwed me over, and everybody else who was affected deserves justice. It would be a huge help if anybody could share the WorldCurrents Podcast to their friends on Spotify, Apple Podcasts, and wherever else podcasts can be found at. or if they would share the WorldCurrents or Matador Investments YouTube channels. You can also go to WorldCurrents.co to find out how to donate to the legal fund that I'm starting up or to help support this podcast. Any money that I make in the near future off of any of these projects will go completely toward the legal fees and to help pay back people with stories similar to mine. Thank you so much and have a great week, everybody.